We're here with Andrew Street talking about credit risk. Andrew, your credit risk courses have been oversubscribed this year. What makes the topic so important at the moment?
Well, I think you only have to go back 2 or 3 years to the credit crunch 2007-2008 to know the answer to that. I mean, one of the largest financial crises that we've ever experienced really was a direct result of poor credit risk management. And I think the lessons that are still being learned from the credit crunch are filtering through to the industry, and I think the whole industry is really just looking to up their game in terms of their ability to measure and to manage credit risk. And so there's a great deal of interest in credit risk at the moment, as indeed liquidity risk as well, which obviously is a related topic. And so people are hungry to learn the lessons of the credit crunch and really how we can make sure that those sorts of mistakes don't happen in the future. So as you rightly say, there is big demand in this area at the moment.
There appears to be a lot of credit courses on the market at the moment. What would you say makes your approach so different?
Well, I think it's the mix, it's the blend between the sort of theory and the practice. I mean, one of the things that I bring to this course is obviously a practical experience of taking credit risk actively for a living, and also being involved in the risk management and also the regulation of credit risk via my work at the Financial Services Authority. So I think this course is really a blend of practical experience and also theory and also the regulatory impact as well. And I don't think there are many courses around that really give you that kind of integrated view. And I think that's one of the reasons the course is so popular.
In your career, you've held senior positions as both a practitioner and regulator. What insights would you say this allows you to bring to the course?
Well, I think fundamentally to understand sort of both sides of the fence. I mean, at the end of the day, as a practitioner, you know, one has to make a living. One needs to take risk in order to earn a return. And of course the incentive is to take too much risk, and that's both damaging for the firm and also damaging ultimately for the financial industry, as we've seen. As a regulator, the problem is of course that one relies on the industry being productive. You can't regulate an industry that doesn't work, but at the same time you have to be able to control the level of risk that's being taken so that you get an end result which is beneficial both for the industry and also beneficial for the economy. And if you are a regulator, it's very difficult to understand in detail what's actually going on within firms. So it means that one needs to understand, if you like, the needs and scope, if you like, of both parties. And I would say that having worked on both sides of the fence, it is a very different perspective one has on the business if you're a practitioner versus being a regulator. And I think perhaps in the future one of the things we need to do is to make sure that there's a bit more understanding, if you like, about what the other person's trying to achieve. And I think we're seeing that now, really, as a result of the credit crunch.
What practical benefits would someone get from attending this particular course?
I think the key features really are a detailed understanding of what credit risk is and how we can measure it. And I think it's important to understand the limitations of models. At the end of the day, risk models are looking to predict future behaviour, and of course they aren't perfect. But it's important to understand the limitations of models and how that feeds into regulatory requirements. So that understanding how much capital is needed basically for to support the credit business, and also the nature of the credit decisions that are taken in order to be able to manage and make sure that the credit risk is sensible within the risk appetite of the firm. I think all of those factors need to be understood in some detail in order to be effective within a bank, whether your role is as a risk manager or whether it's a manager of an operational area or whether it's a manager of a trading area or indeed senior management. And I think one of the things this course allows people to do is to explore all of those elements in detail in a classroom environment, to be able to see practical examples, to be able to get some hands-on experience of pricing up deals, for example, and also being able to interact with other people who are in similar positions and be able to share experiences and to be able to go back to their organisation with a much greater confidence that they understand exactly what's going on and how it works, what the pitfalls are, and more importantly, how to avoid those pitfalls in the future.